Hey guys, it's Kelvin. Today is April the 21st, 2019. Happy Easter, everybody who's watching. I wanted to throw out a free video today since it is Easter. And in today's video, I wanted to touch on a pattern that shows up on your charts. This is best traded on the H1, H4 daily, weekly, and monthly charts. And again, if you're trading the higher time frames, please make sure that you have a broker that is not killing you on swaps. Because if you're holding for 3, 4, 5, 6 months at a time on a position trade, those swaps can really add up. So you want to make sure it's worth it. So, but I wanted to jump into this here. This pattern shows up at major tops and major bottoms of markets. And if you're able to get into these, you can have an amazing reward to risk on these. And the chances of losing these kinds of trades are very, very, very small. So these are some of my favorite trades to take, not just because they usually go, well, they can sometimes go really far, but again, because your risk on these are really, really low. And the lower your risk is, the better off you're going to be here. So there is one setting up kind of right now on this chart, well, almost, but I want to go over one that has happened in the recent past. This happened back in 2017. I want to draw your attention to this bottom right here before this massive run up, and we've essentially gone from a low down here of 161.66 all the way up to here, a high of 188.61. That is about 2,700 pips. You probably wouldn't want to hold the entire position from here all the way up to here. Again, this is, what is it, August, September of 2017, all the way until April of 2019. That's a hefty amount of swaps, but, and that's, I mean, blowing through every possible target. I mean, the reward to risk on that would be, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Probably about a 9-1. I mean, it would take forever to get there, but even if you caught a portion of this move right here, you're sitting pretty good. So I wanted to talk about it. So what you see happening here is, if you look to the left on your screen, you have a massive top right up here around 223. Really hefty sell-off all the way down to here. You see your first pullback into the in this trend to the coral right here, no surprise, and the 800 period moving average. And then you get another second sell-off right here, a very, very harsh once again. And then you get another small pullback. Doesn't look good for the trend at this point because you're still getting very hefty sell-offs and you're getting minor pullbacks comparably. In fact, if I grab my fib tool out here, it looks like this first pullback right here was, well, let me draw this properly here. This first pullback was right around the 50% mark, not quite to 618. So that's a pretty hefty pullback in this trend. And then you've got this, again, this is a very small pullback in the trend. So at this point right here, I see absolutely no reason to be buying this market and holding long term. Let me say that again. You've got some pretty hefty pushes down, a pullback, another second wave down, and then another small pullback. As we come down into here, I see no reason to buy this market because you're still getting really hard sell-offs and you're still getting really shallow pullbacks. That is not what you want to see if you are looking to buy a bottom or a top. But then you have this right here. You get another push down right down into here. And hopefully you're noticing the first leg down, the second leg down, the third leg down. And then we have another push up here. What we're noticing at this point here is you are having shallower pushes down with each consecutive leg. At that point, my attention is beginning to turn towards this pair because I'm thinking in my head, they're not finding as many sellers to push this price down. So maybe there is a potential bottom forming. So we have this push up here, and this push up here is actually pretty decent. In fact, it's almost recovering the, well, let's get the fib tool out here. This last leg right here, this is recovering over 61.8%. Once I get over that amount, I am carefully watching these markets, because if the trend was really that strong, you probably shouldn't have reversals this heavy. So what happens here is we come back down to the bottom right here, and this low is going to hold this time, and then we see another push up right here. This right here is what is very significant in my eyes. We created a double bottom right here. We were not able to break the lows. And again, remember, this trend has been going on for a very long time. One pullback, two pullbacks, three pullbacks right here, double bottom, and now here we go. We have a brand new swing high, which means what? This means that sellers could not take over this market by breaking down into a new low, and we have a higher high, which means that there are new buyers coming into this market, which tells me there could very well be a major reversal taking place. If not a major reversal, you're at least going to see a short-term move on a pullback down. And how far that goes and all that is going to be based off of what we're seeing on the higher time frames and what's going on there. So we're going to touch that a little bit also here. But one thing I want you to take note of is this. This is a very big deal. Anytime somebody wants to get into a double top or double bottom, a lot of times they don't take these into consideration, what I'm about to show you here. And this is actually pretty darn important. I watch this very carefully. Let's say, for example, we have this push up right here. Notice the really hard fall right here. This is not ideal when it comes to getting into a double bottom. Let's say this right here. Somebody sees a big push up and then they see this coming down right here. They say, I want to get into this market. It's a double bottom. But you have massive institutional selling right here. These massive candles. This is not retail traders selling this kind of move. This is insane. There's no way that I'm going to buy something like that. What I want to see is something like this, where you have a slow retracement back down to the lows. This is much, much safer than what you're going to have in a situation like this. So what happens is it gaps down, not quite to the low, but darn close. We pop back up here, and then we slowly retrace back to the bottom, and this is where we create our bottom, and we push back up. Now, the area that I want to bring your attention to is going to be right down in here. This is essentially where my buy zone is going to be. You can see we came just a little bit shy of that. Why is my buy zone down here? Well, you've got a wick right here. You've got a wick right here. Again, these are buyers jumping into the market. And then you've also got a candle. I look at candle bodies and wicks when it comes to creating my zones to jump into the market. You have a candle body right here. You have one right here, one right here, one right here, one right here, almost right here. So you have a lot of candles and wicks in these zones. And then you also have, I guess you can make a case for one right down here. There's a reversal right here. Almost a candle right here. There's a candle body right here, a wick right here, and a wick right here. So this is basically the zone to get into the market. Now, a lot of times when they pull back like this, you have to be very careful once it gets down to those lows, because a lot of times it will reverse a little early. And for that reason, sometimes I will scale in just a tad early on this, because ultimately, if you have a brand new high here and you are coming back down into the lows here, a lot of times, again, depending on what the higher time frames are saying, you should probably go back up and at least retest this area right up here. If you are entering right here or even right here and your stop is just below the low down here, this is your risk right here. If you're making this kind of reward, you're still getting a 2-to-1, 3-to-1, maybe even a 4-to-1, depending on your position. Again, if you scale in right here and you're scaling in right down into this zone here, your average is going to be right here. If your stop is maybe right down here, This is just a little bit of risk for all of this reward. So as long as your reward to risk is good, it's okay to scale in a little bit early. But again, you have to be careful of the kind of setup. But in this case, it's a very, very nice setup. And again, this leg up right here, this is really the first leg up in the new trend. You have 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of upside momentum. The retracement back down. Again, notice over here, this is not something I'd want to trade. It took several weeks to go up and then basically 2 weeks to fall back down. That's not what I want to see. I want to see a slow pullback down to these lows. If I can see that, that is going to further enforce this level right here and increase the likelihood of me winning this trade. So the push down on this took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 weeks down and 9 weeks up. Typically, if there's a 9-week push up, I want to see at least a 9-week push down. If I'm seeing 12, 15, 16, 20 weeks down, slow retracement back down, this is going to make this very, very attractive to me. Now, again, like I said, a lot of times this won't show up, but when these do show up, you need to pay very close attention because these are very, very nice areas to get into the market. And this is what I call a structure setup. In my course, I go over this into great detail. This is actually one of the harder concepts for people to understand, but once you understand it, it is basically a gold mine because these work out so darn well when they do pop up on your charts. And again, these are best for higher time frames. H1 and higher, I typically don't go below the H4, but if I do see something like this on H1, I'll definitely jump into it because it's going to work out. Even on the lower time frames, it can work out pretty well. But again, I stick to higher time frames. I'm more of a swing and position trader here. But that's the weekly chart. Now, let me put a line on here right here. This right here is the bottom of this market. And again, this is where I'm looking to get into this market. And now if I go up to the monthly time frame, let's see what is happening here. I'm going to zoom in just a little bit here. Again, here's the bottom right here. We pushed up to resistance right here. We pulled back down, created that double bottom. We were able to grab a few new buyers right here, and then we came right back down to the lows down here. The one thing that I want to draw to your attention here is this. This again is the next higher time frame. And what's happening here is as price is pulling back down into these lows, this momentum indicator continues to push up. When I see this kind of action on this, I get really, really excited. Typically, if the trend is down and we're going to break down, this should be turning red as we see pushes down, just like this right here. We see some momentum to the downside, a pullback up, and what's this doing? This is still red, it's still dropping. That means the momentum is still to the downside, and you're going to have people trying to buy this, which is crazy because the momentum is still very, very weak. So what happens? We get plowed, and the traders lose a lot of money that are trying to buy this. We continue down to the lows, but anyways, on the last pullback, this is key right here. Again, on the weekly time frame, I'm wanting to get in down here because this chart pattern right here is very strong. We have new buyers. So this is further enforcing my buy level down here if we should get back down here because these buyers do not want price to go back below this level right here. And also, like I said, it's a slow retracement back down, which is very, very bullish to me. And if you go to the monthly time frame here, as we push back down into these lows here, what's happening? The momentum continues to fly up. This is not normal. You should not see this if the trend is weak. This is a big sign of a reversal in trend. And when you see momentum like this, that typically means the market's getting ready to push up very hard and often very fast. So if I see this, common sense should tell me, hey, I should not jump into this trade down here and look to take profits right away. Some people would say, man, I want to get out of this. I'm up. Let's see the bottom down here. Let's say you jumped in at 163.50 or 160. Well, the low was 160, 166. Let's say you got in at 162. Price pops up to here and you are up, well, about 400 pips. Some traders may say, man, I'm up a lot of money, I want to get out of this trade. But in all reality, if you look at the monthly time frame, the momentum is incredibly strong. So if it's strong on the monthly, guess what? It's probably going to be going pretty far because the higher time frames are king. So trader A gets out of the market right here because they're afraid to hold this trade. And guess what happens? They come back in a few months and they see that price, even though they got out, let's say they got out right here at 168, they come back in literally a couple months and they see prices all the way up to 179. They could have made 1,000 more pips. But again, the monthly time frames, the higher time frames are king. And when this is saying that this is getting ready to go up like this, you should probably be holding a runner because it is most likely going to explode. And again, we've seen a similar pattern up here, been watching this for shorts as well. I did not get into this because of the flash crash, which you can't see on this. I'm using FX Choice today, so it's not showing the flash crash, but that's kind of kept me away from a lot of the Aussie and yen pairs somewhat. So, but same kind of pattern going on here. Here's the bottom. You see small pullback, a little bit bigger pullback. Pullback gets much stronger here. So I am watching these areas up here, and you can see we did come up here, and then we sold off really, really hard. In fact, we went from, let's see, the high right here was 187.25 all the way down to 172. That's a 1,500 pip drop. And again, similar pattern over here almost showed up right here. The only difference here is while we did make a double bottom down here, we did not push to new lows. And by the way, you should not be seeing pullbacks this strong in the trend. Again, you have small pullbacks and they're starting to get deeper and deeper. When you begin to see that, that means these tops are more likely to reverse and they're more likely to go quite a bit further. So that's why I've been looking for potential reversals up here. As long as we have little pullbacks like this, I'm not real interested in taking a short. But the bigger the pullbacks get in the trend and the longer the trend has been going on, the more likely these tops are going to reverse really hard and create a pretty lengthy fall. So, and again, I want to show you this pattern right here. Again, big push up, slow retracement. It has happened again right here, and it is falling. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of drop, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks up. And again, when you see this kind of pattern, that is further enforcing your double top or double bottom. And then you can see it right here. We come right up into this high, and again, you don't place your stop. I've seen people do this, and I want to scream. You don't want to place your stop. Let's say you're like, well, let me get into this trade. Let's get in right here. This is the candle top. It's probably going to reverse here. You decide to get in here, and you're like, let's put a stop right here at the top. That is a huge, 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 huge mistake. Oftentimes, the market will go just beyond the last high. So typically, I leave at least a 1 bar stop above this high. 1 bar meaning these grid bars right here. So my stop is going to be about right here at a minimum. So that means this right here is my risk. And so far we have dropped about 2 bars. So I'm almost at a 2-to-1 if I were to get into this trade, which is a very good reward to risk. And if it does drop, let's say down to here, you've dropped 1, 2, 3, 4, 5. You're at almost a 5-to-1 down here. So if you're risking $1,000 on the trade, you're making $5,000. That's nothing to complain or cry about. But again, the pattern is one I want to bring your attention to. You have a pretty quick fall right here. And again, this trend is going on for a very long time. The longer the trend has been moving, the more interested in shorts I am. And when it's at the beginning reversals of the beginning of a new trend, I am not really looking for reversals. A lot of times people might say, well, this is a big level. Let's look for a reversal right here. I'm not looking for a reversal here because the momentum on the monthly is very strong and we are at the beginning stages of a brand new trend. So this is not a good area to look for a reversal. You want to wait until the trend has been going on for a long time, and you want to wait for the pullbacks to be getting deeper and deeper. Again, shallow, shallow. This is where my attention is peaked. We are starting to get a strong pullback in a trend. When you see this, you need to be looking for shorts, because in a strong trend, you should have minor pullbacks, not something like this, not something like that. That is not healthy for an uptrend, and it should not be happening. So you should be looking for shorts for a potential reversal in the trend. And of course, you want to work with major pivots in the market to get in, so that you are minimizing your risk and maximizing your success rate here. So again, I'd be looking for a short up in this level. And again, this is pretty good. Like I said, you're getting some really hefty pullbacks in this market. So this is making for a very nice shortable pattern up here. And again, it looks like we're trying to roll over here. We've dropped maybe, 500 pips off the top here. Actually, from this level right here was 87.26, and we're down to 81.50. So we've dropped about 600 pips so far. And again, it's very possible we could come all the way back down to here. But you're just looking for really nice patterns in the market, and you are trying to take advantage of those. But that is what I wanted to show you again today. Again, remember, look for patterns that are going to put the favor or the odds in your favor. And again, these are such patterns right here. Again, and again, I go over all this in my course too, in quite a bit of detail. But if you guys got questions, please feel free to reach out. And hopefully what I've showed you today is enriching your trading and making you a better trader. And until next time, guys, have a great day.